All right, continuing on in our discussion of AUC Section 240. Now we're going to talk about communications to management and with those charged with governance. And up until this point, we have discussed with management and those charged with governance their policies around fraud. We have, or rather, fraud prevention and internal controls related to it. We've also assessed the risk of material misstatement due to fraud. Then we responded to that risk by obtaining evidence and performing certain procedures. And now we are evaluating our findings related to that evidence and the procedures that we performed. And now we need to communicate with management and those charged with governance what we found based on those procedures. So this is in AUC section 240.39 through 41. So it says first that if we have identified a fraud or something that indicates that fraud may exist, we're required to communicate those matters on a timely basis to the appropriate level of management in order to inform them that or inform those with primary responsibility for the prevention and detection of fraud of matters relevant to their responsibility. So we found fraud or a risk or something that indicates that fraud may exist. We need to tell management so they can figure out what to do with it or correct it because that's their responsibility. And also, if those charged with governance is outside of management, for instance, there's a board of directors or some formal committee like that that is not part of management, and we suspect that management is if management's involved in the fraud, or if employees with significant roles in internal control are involved in the fraud, or others when the fraud results in a material misstatement in the financial statements are involved with the fraud, then we need to communicate those matters to those charged with governance on a timely basis. And so if we do find fraud that's perpetrated by management, we need to give those suspicions to those charged with governance and then explain to them the nature, time, and extent of the audit procedures that we need to do to complete the audit. And it's really important for us to notify those charged with governance if management is involved in a fraud, because just notifying management wouldn't fix the fraud, or because they're the ones that are perpetrating it. So, and also once we've found this fraud occurring, there might be additional procedures and more extensive tests and work that we need to do to get comfortable over the financial statement as a whole, especially if management's involved, because then the fraud may be pervasive across all accounts and disclosures within the financial statements. So we need to let those charged with governance know the extent of what additionally we need to do because of that fraud. And then we also need to communicate to those charged with governance any other matters that we think are relevant to their responsibilities. And those things that we come up with would come from our professional judgment. So we've got a lot of explanatory material here, 67 through 71. So let's go down there and see some more details about how we go about communicating with management and those charged with governance related to our findings related to fraud. Okay, so now we're down in the explanatory material as relates to how we go about communicating to management and those charged with governance about our findings related to fraud. And first here we discuss communications to management. And so it tells us here that if we obtain evidence that fraud exists or that may exist, we should bring that matter to the attention of the appropriate level of management as soon as practicable. And so we have two different things here: what constitutes or what amount of fraud needs to exist before we let management know about it, and then also how do we determine what level of management we need to report this to. And so it tells us that we need to report to management any level of fraud, no matter how small or inconsequential it seems. Maybe even if we find that an employee expensed a personal expense for $5, we need to let management know about that. And so what level of management do we need to report this to? It says that we need to report it to at least one level above the person who appears to be involved with the suspected fraud. So in our example of the expensing of a personal item for $5, we might report that to this person's direct manager. And that's, of course, unless we find that there's some sort of collusion going on, maybe between this person's manager and the fraud perpetrator, then maybe we should go above that manager to let them know of the fraud occurring. So in summary, no matter how inconsequential the fraud seems, we still need to report it to management and to at least one level above the people who are perpetrating the fraud. So next we have communication with those charged with governance. And so AUC section 260 describes in more detail what we need to communicate with those charged with governance. So this section, AUC section 240, that we're going through now, is very specific to the matters related to fraud that we need to disclose with them. So this tells us that in AUC section 260, it tells us when we need to communicate orally or in writing, but since fraud is such a sensitive matter and may involve senior management, it might be our best decision to communicate these matters in writing, just to protect ourselves and also make it more clear about what's happening in the organization that those charged with governance would need to know about. And so we don't really have a responsibility to communicate to those charged with governance every matter of fraud that we may come across if we don't, in our professional judgment, deem it important to the responsibility of the board or those charged with governance. But we certainly could communicate that information to the board if if they prefer us to be informed of such circumstances. And it's also helpful if early in the audit we agree with them about the nature and extent of our communications in this regard. They may tell us not to communicate frivolous matters to them, and we would want to abide by that. But there's certainly no rule against us communicating everything that we think is necessary the board should know and that falls within their responsibilities. And so if it turns out that we have doubts about the integrity or honesty of management or those charged with governance, we should obtain legal advice to assist us in determining the appropriate course of action. And finally, we've got a short list here of other matters related to fraud that we should discuss with those charged with governance. And those might be any concerns we have about the nature, extent, and frequency of management's assessments of the controls in place to prevent and detect fraud, any failures by management to appropriately address identified significant deficiencies or material weaknesses in internal control, our evaluation of the entity's control environment, including questions whether the management has competence and integrity, any actions by management that may be indicative of fraudulent financial reporting, for instance, any accounting policies that management uses to manage earnings or deceive financial statement users. We might also communicate any concerns about the adequacy and completeness of the authorization of transactions that may seem to be outside the normal course of business. And finally, absence of programs or controls to address risk of material misstatement due to fraud that are significant deficiencies or material weaknesses. So in summary, all of these things are generally steps that we had in the risk assessment process when we were going through determining what risk of fraud may occur. And so these are basically our findings related to those risks that we were exploring. And we should make sure to communicate those findings to those charged with governance.